Afternoon, everybody. It's about 3 p.m., October 1st. We are looking at the S&P. This is the monthly chart of the S&P. I'm just looking at it like, okay, what does the overall huge picture of the S&P look like? And if you just take a line and you put it at the top of these peaks, this is a logarithmic chart, right? This is the top in 1929. This is the top in the 2000, right, where you had the crash, the ABC, and we are in that same area right now, uh, at the top of that trend line, exceeding it ever so slightly. All right, doesn't mean anything. Everybody's seen lines like this before. I'm not saying it's going to stop here. I'm smarter than that, but I'm just saying that historically, if this line means anything, when you get to this line, usually you get some kind of reaction, and we have not gotten it just yet, but we're there. And we've exceeded it slightly, which is not a surprise, but we are in that zone of if it's going to pull back from a trend line, it's exceeded it enough where, now you could potentially have a fake out. Having said that, we could moonshot past 7,000 easily. If they make an announcement next week that the government shutdown is over, it could be enough reason why this RSI on the weekly wants to keep pushing up. It's gotten really high in the past, right, with divergences, and we're not that high yet. So this could keep going. All right. Having said that, getting over 67,000, 6,700, we did it last week. We pulled back immediately. I mentioned it in the video that Jesse Livermore often says when you get to a psychological level and back off immediately, usually the market wants to go up and test that level again and exceed it to see if there's acceptance. Okay. We are doing that right now. We're peaking above 6,700. We're looking to see if there's going to be acceptance up here. No, I'm not sure. I'm not sure at all if there's going to be acceptance. If there's acceptance, then the next target is obviously 6,800. Okay, and we keep going. What is concerning? Well, there's a couple things that are concerning. One is you've got daily bearish divergence, right? And we have triple bearish divergence here, right? We have a peak here, we have a peak here, and we have a peak here. Now, this can go higher. Like I said, it can go higher to make another peak on the divergence, but we're getting into triple daily bearish divergence. Usually not a great time to be considering long positions. Okay? Doesn't mean to be short, it's just a caution in terms of longs. It's like, well, you do have this divergence and it's triple, and it might be a little bit wiser to wait for a more substantial pullback after this huge run. Doesn't mean it's going to happen, but it wouldn't be a spot where I'd be going all in long. Although the bullishness out there is excessive. Now, a couple of things just to notice. IWM is also at a double top here. We slightly exceeded the high of IW. Actually, we never exceeded the. Did we exceed the high? I don't know. We're at a triple top on IWM, basically. All right. So this is a dangerous area where you could have a slightly excessive high, which we had right recently. So an all-time high, but then it doesn't get accepted. That seems to be what's happening as of right now. Notice the weekly RSI, how high it is, right, on IWM, higher than the previous peaks. So we are at a zone, sort of a nosebleed zone on IWM, and we are at an obvious resistance point. I mean, anytime you have a peak, it gets tested and it gets rejected, and we get back there again. It's resistance until it's not resistance. And so far, they've broken through, but they couldn't get acceptance. This is what it looks like on the daily. Now, daily could certainly go up, and you can go slightly higher. But I'm just saying that we've had these double tops, and we had triple top from the previous high, and so far we're not soaring through here. Okay, so there's resistance in this level for IWM. Also, IWM is relatively weak. Also, the Dow Jones Transports is relatively weak, and Dow Jones Transports did stop at a resistance level of 16,500. This has been relatively weak. Transports usually confirm or deny a bullish move. So right now, the transports are saying not so fast. Yes, we're at all-time highs, and it is bullish for the market, but this isn't following in the same lockstep manner, right? It never did make a new high, unlike the Dow Jones. Okay, here's Dow Jones made a new high up here, right above these highs, but the Dow Jones Transports has not done that yet. So this is still a warning sign. It's not a timing indicator, but it's a warning that, hey, if everything is safe, Dow Jones Transports theoretically should be following through with all-time highs as well, and it's not doing that. Cycle guys are definitely talking about the possibility of a recession, some kind of monetary problem coming. They're they're clear about, like, we don't know exactly when, but the cycles are showing that a reversal in liquidity, a reversal in the the overall movement of the market could be coming rather quickly. Now that we have a government shutdown, and probably the two sides are not going to be talking very much, not that they ever did, but anyway, it could be that may start triggering some selling, some indecision. I'm not sure. Which gets me into looking at the high yield bonds, and just I don't know a lot about the theory behind bonds and how they work exactly, but I do know that bonds often will lead uh, the markets. Okay, and you can see with bonds today, we're down 0.3%, which doesn't sound like a lot, but it was a big gap down. We had a big gap down last week, and we have another gap down now. Now this could go up and make another high, but this also, if you look at the weekly chart, you can see that we have bearish divergence here on a weekly chart. Right, this high here and this high here is much lower. This was the move down in earlier this year, and it does look like an A and some kind of B wave here. So, it just eyeballing this, you have a trend line here, and I'll show you the monthly. But you can see where we basically are is right there. And when you zoom out and look at the monthly, this doesn't look like a bullish formation to me. It looks like, extreme move down, and then, okay, so this was an ABC back up, right? But then this and this looks like a bear flag right now. Okay, I could be wrong. It could go higher. I mean, there's potentially more room to the upside here, and you could keep going. Like, there's a trend line here, and so it could pop up some more, and it may. But when I look at just that formation that we're making on the monthly, yeah, that doesn't look great. I mean, a down move and this kind of consolidation upward, yeah, it's usually not a great formation for bulls. And you have monthly hidden bearish divergence, which means the RSI for where we are on this HYG, the monthly RSI is higher than the previous peaks, where we are right now. See the RSI? And before all these previous peaks at higher price levels, they were all right around this level, but lower, right? Except for this one. So in general, again, just RSI wise on the monthly, it's looking like, well, is this thing going to crack down? Are we going to get sort of an A, B, C from here and test the lows? Could be. J and K, very similar. Junk bonds, very similar. LQD, very similar. It's interesting. The Foundation for Cycles put out a couple videos and mentioned corporate debt and some other issues. I would check it out. I'm not going to put a link or anything, but just check it out. Foundation for Cycles. They do really good work. Really good guys over there, and they're seeing things that look really problematic in the plumbing of the market. And when I see the technicals, they gave me the idea. So when I look at the technicals, I say, well, yeah, I can see technically why there could be, a bigger move down from here. You know, this does not look like it wants to just keep going up. It looks like it wants to just consolidate maybe a little bit more and then possibly drop. And you can see if this is a true bear flag, if I'm not saying it is, but if it's a true bear flag, you're talking about testing the lows of the 2009, 2008 financial crisis. And we all know what happened then, right? So, hey, I'm not an expert in bonds. I'm not an expert in finance. I'm not even an expert in charting, but this is what I'm seeing, and I'm sharing it with you. Like, hey, this is I don't know. It's interesting, that's for sure. Um, and since everybody's very bullish, and the economy is slowing down. I mean, obviously, we had the job revision numbers today. I mean, I just think everybody's, they're high on fumes, and it's a little bit like, bad news just isn't really registering in the market, but I think at some point it will. And that some point might be rather soon. Uh, we'll have to see. But these lines haven't worked so far, but like I said, the cycles that are being talked about are bearish into 2026. Whether or not it actually happens, I can't say. Um, but I do think we could all be very surprised. That's all I'll say about it. Okay, that's the video. Everybody have a great rest of the week. I'll update if I feel like I need to or should, but I wanted to share that information. Have a wonderful rest of the week.